Market participants perked up amid positive news on the fight against the coronavirus pandemic and practically ignored the alarming ones about the possibility of a second wave of the virus. US stock futures lost about 1% at the beginning of the session. The US dollar index bounced up amid a decline in the risk appetite. Hopes for a revival in economic activity sparked a rally on Wall Street last week. The US major indexes ended the trading week with an increase of almost 4%. Today, trading sentiment remained positive for the most part of the day, but later the situation changed. Investors expressed fears that the early cancellation of quarantine measures may trigger a new wave of the infection. Reports from South Korea on a new surge in the coronavirus cases have raised concerns that economic activity will recover much more slowly than many have anticipated. US stock futures started the New York session in the red. The Dow Jones Industrial Average dropped by more than 1%, falling to 24,042 points. The benchmark S&P 500 index also tumbled by more than 1%. Overall, the index is more than 13% below its highest level in February. Analysts do not rule out another sell-off. Judging by the latest reports, economic indicators around the world are deteriorating, which may lead to a deep and prolonged global recession. At the beginning of the week, safe haven assets come under pressure after some countries announced the easing of the lockdown measures. For instance, Japan is going to lift quarantine restrictions in some regions of the country. In addition, New Zealand and the UK are planning to reopen the economies this week, while most of the shops have started to work in France. On Monday, the US dollar index fell to 99.72. However, the greenback was strong enough to win back its early losses and managed to approach the high reached on May 7th. At the start of the New York session, the US dollar index was seen above the level of 100 points. Some experts believe that the weakening US dollar may indicate the moment when the global economy starts to recover. Given the current trajectory of the American currency, this moment hasn't started yet. The US dollar is no longer supported by the interest rate cuts provided by the Fed Reserve. Instead, it's steadily gaining ground, being a preferred safe haven asset among investors amid low risk appetite. The Canadian dollar went down on a Monday trade, having lost a near 0.5% against its American counterpart. The loonie reacted neutrally to the news from the labor market and is now holding relatively stable. The USDHC pair is currently trading at the level of 1.3980. After breaking through the support level at 1.3928, the pair will probably test three key levels at 1.3800, 1.3635 and 1.3450. Meanwhile, Brent crude continues to trade at $30.70 per barrel. It's also possible that Brent will advance to $32 per barrel. Still, the quotes are unlikely to hold there for long and will most probably stay at the level of 30. WTI futures are expected to rise above $26 per barrel in the short term. Traders will mostly focus on the announcement from the US Federal Reserve. It's speculated that the regulator may bring interest rates into the negative territory. That's all for today. We keep monitoring the financial market situation. Subscribe to our channel and keep abreast of the latest events. See you tomorrow.